As of today, Friday, December 20, 2024, the live stock price for Axon Enterprise Inc., trading under the NASDAQ ticker symbol AXON, sits at $594.20 USD. This represents a substantial intraday move, with the stock up 30.92 points, or 5.49% during the current session. While many investors are watching high-profile names like Tesla stock or Nvidia stock for their daily fix of volatility, Axon has quietly built one of the most resilient and high-performing charts in the industrial and technology sectors. Most people look at this company and see a hardware manufacturer that makes devices for law enforcement, but the reality is far more complex and significantly more profitable than that surface-level observation suggests. The immediate insight you need to grasp is that Axon is effectively transitioning into a software-first enterprise where the hardware serves as the gateway to high-margin, recurring revenue streams. While the hardware is essential, it is the ecosystem of evidence management and artificial intelligence-driven reporting that is actually driving the valuation we see today. If you look at the broader landscape of online investing and the various investing sites that people use to manage an individual brokerage, there is a tendency to categorize Axon as a defense or aerospace play. However, the market is beginning to price it more like a high-growth SaaS company. The common ground here is that everyone knows Axon as the company that created the TASER. That legacy is the foundation of the brand, and it provides a steady, reliable base of revenue because the product is virtually the industry standard. However, the contrarian take that is forcing the market to rethink this stock is the speed at which their cloud services are outpacing the hardware sales. When you use a platform like Robinhood stock trading or a more advanced interactive brokers platform, you can see the institutional activity starting to reflect this shift. Big funds aren't just buying a weapons company, they are buying into a centralized public safety operating system. This expectation versus reality gap is where the current tension in the stock price lives. Investors expect steady growth from government contracts, but the reality is an explosion in data management needs that Axon is perfectly positioned to capture. The recent stock movement we are seeing today is a reflection of this momentum. We have seen consistent trading volumes that suggest institutional accumulation rather than just retail speculation. If you are managing your own portfolio through Schwab Intelligent Portfolios or using various online investment tools, you might have noticed that Axon has been hitting new highs while other industrial stocks have struggled with macroeconomic pressures. This isn't an accident. The company has a unique shield against inflation because its primary customers are government agencies with dedicated budgets. Even as the broader market reacts to interest rate shifts or consumer spending reports that might affect Apple stock, Axon operates in a niche that is somewhat decoupled from the typical economic cycle. Recent earnings reactions have been a primary catalyst for the price action we are witnessing. The company has been putting up numbers that consistently beat expectations, particularly in the software and services segment. We are seeing 40% growth in annual recurring revenue, a figure that is almost unheard of for a company with such a large hardware footprint. Institutional activity shows that funds are willing to pay a premium for this growth because the retention rates are incredibly high. Once a police department integrates its body cameras with the Axon Evidence cloud platform, the cost of switching to a competitor becomes prohibitive. This creates a deep moat that is very attractive to those looking for investment help or self-investing guidance. If you are following the sector momentum, you'll see that public safety technology is becoming a priority for municipalities worldwide. This isn't just about the United States anymore. International expansion is a massive, untapped part of the Axon story. As we look at the daily swings, it's clear that the market is beginning to factor in the potential for these international contracts to mirror the dominance Axon has at home. When you look at the Fidelity trading platform or use the Fidelity mobile app to check your Fidelity brokerage account, the technical indicators for Axon often show a trend of higher lows, which is a classic sign of a stock in a strong, sustained uptrend. Before we go any further, I want to hear from you. Comment below how many shares of Axon Enterprise you currently hold in your portfolio. Are you a long-term believer in their shift to software, or do you think the hardware side still carries the most weight? Your perspective helps everyone in this community get a better sense of the retail sentiment behind these moves. To understand why the stock is behaving this way, we have to look at what the company actually does on a day-to-day basis. Axon's business model is built on three main pillars: TASERs, sensors, which include body cameras and in-car cameras, and the cloud software that ties it all together. The hardware side is quite sophisticated. The latest versions of their devices are fully integrated with the cloud, meaning as soon as a camera is placed in its dock, the footage is uploaded, encrypted, and organized without the officer having to do anything manually. This addresses a massive pain point in law enforcement: the sheer volume of paperwork and data management. Older reports often focused on the controversy surrounding their products, but the modern investor is looking at the efficiency gains. By using artificial intelligence to help draft reports based on body camera footage, Axon is saving departments thousands of hours of administrative work. This is the reality that is currently exceeding the expectation of Axon just being a hardware provider. They are solving a labor crisis in public safety through automation. This is why you see them featured so prominently on SoFi Active Investing or as a staple in many Fidelity mutual funds. Looking at past performance, Axon has been a monster. If you had invested a few years ago through a Robinhood app or any of the popular investing sites, you would be looking at significant outperformance compared to the S&P 500. But the past is only a guide. The future outlook is what determines if this movement can continue. The potential scenarios for the next few years include a complete domination of the digital evidence market and a possible expansion into the private security sector. Companies like hospitals, retail chains, and stadiums are starting to look at Axon's body cameras and software for their own security needs. This would effectively double or triple their total addressable market. However, there are risks to consider. The stock carries a high valuation, which means the market expects perfection. If there is a slowdown in government spending, or if a competitor manages to break their cloud moat, the stock could see a significant correction. Macroeconomic pressures like rising component costs for their hardware could squeeze margins, though their high-margin software revenue acts as a natural hedge. When you are doing your own online investing, it is crucial to keep an eye on these margin trends. Whether you use Fidelity Wealth Management or manage your own individual brokerage via interactive broker's fees analysis, you need to be aware that Axon is a growth stock, and growth stocks are sensitive to any hint of a slowdown. Catalysts to watch in the coming months include new product launches in the drone and robotics space. Axon is moving into the drone as first responder category, which could fundamentally change how emergency calls are handled. If they can successfully integrate drones into their existing evidence ecosystem, it would be another layer of recurring revenue that the market hasn't fully priced in yet. This is the kind of forward-looking analysis that separates a smart investor from someone just following the crowd on a Robinhood crypto forum or looking for quick wins on the SoFi trading platform. The institutional activity we are seeing, with large blocks of shares being traded, suggests that the big money is positioning for this next phase of growth. Fidelity ETFs and various Fidelity IRAs often hold Axon because it provides a unique blend of industrial stability and tech-like growth. It is a rare hybrid that fits into many different types of portfolios, from aggressive growth to more conservative long-term holdings. As we wrap up this analysis, let's look back at our central theme: expectation versus reality. The market expectation for a long time was that Axon would be limited by the size of the police force. The reality is that Axon is expanding the definition of what a public safety company can be. They are a data company, an AI company, and a logistics company all in one. This is why the stock is up 5% today. It's not just a daily swing, it's a realization of the massive scale they are operating at. If you are using SoFi Invest or managing a portfolio through Interactive Brokers Trading, you have to decide if you believe this valuation is justified. The depth and authority of the company's position in the market are hard to argue with. They have essentially no direct competitor that offers the same level of end-to-end integration. While other companies might make a better camera or a cheaper evidence locker, nobody else offers the entire operating system. This is the reality that continues to drive the stock higher even when the broader market is uncertain. In summary, the insights we have covered show that Axon is much more than its legacy products. Its shift towards cloud services and AI-driven efficiency is creating a business model with incredibly sticky revenue and high margins. Today's intraday movement is a testament to the market's growing confidence in this transition. The contrast between the expectation of a hardware manufacturer and the reality of a high-tech software company is what provides the upward pressure on the share price. Whether